It's the headline number that's going to catch everybody's attention. A huge beat for equity trading, $5.3 billion. To be clear, this is a record in a quarter, not only for Goldman, but for any bank ever on Wall Street. It beats its prior high water mark by $1 billion. You can see, though, shares are off nearly 0.6, or now more than 1%. This might be the reason, because even though they have a huge beat when it comes to equity tradings, a huge miss when it comes to their FIC expectations. $4 billion as revenue is what comes in for FIC trading. The estimate was closer to $5 billion. So they're off by about $0.8 billion, which is a disappointment for this market because many had expected equities trading revenue to be strong. Elsewhere, M&A results, advisory fees 89% higher than this time last year. We knew it was a record quarter for M&A for the entirety of this market. So Goldman Sachs earnings reflecting that too. Their global banking and markets net revenue comes in just below $13 billion at $12.7 billion. That is a beat. Just looking for anywhere in these results, you might see some credit fears. Provisions for credit losses did go up about 9-10% over year at $315 million, but we have certainly seen it higher in prior quarters. In their asset management, you did see AUM beat expectations, $3.7 trillion. Goldman Sachs had said that they were immune from most of the fears of private credit selling that you've seen in some retail funds, though net revenues did fall compared to the same period last year. Also, a note of caution when it comes to the geopolitics in this earnings as well. The geopolitical landscape remains very complex, so disciplined risk management must remain core to how we operate. Shares, though, continue to fall, John. It seems to be that FIC miss, a dark spot on an otherwise solid earnings result.